All right, folks, I am very excited for this conversation with Lobo Tiggre. He is the founder and CEO of Louise James LLC, formerly for Casey Research. Now you are the principal analyst and editor of independentspeculator.com. It's an absolute pleasure to have you, Lobo. How are you doing today, sir?
$5,000 gold, $100 silver. You know, what other answer could I give but fantastic?
We're having a great time, aren't we? And so we've had a great conversation so far this morning with Andy Sheckman, Robert Kiyosaki, and the consensus is that this isn't done anytime soon. And so just your quick hot take right as we get started here on the $5,000 ounce gold and $100 silver.
So the silver bulls and gold bulls always hate me for being the voice of reason. That's the last person anybody wants at a party, is the voice of reason to rain on the parade. I won't say that Andy or Robert are wrong. I will say that this is not a buy low time in the market space, and therefore just beware. At some point, you know, no price goes vertical forever. At some point, even if it breaks and then goes higher later, there has to be a change of pace. So, you know, you can start sending the hate mails to your audience if you like, but I'll go ahead and be the one to, if not rain on the parade, just call for some measure of reason.
Yes.
You know, bulls and bears can be right or wrong, but pigs get slaughtered.
Yes.
You don't want to be a pig. One last thing, and I'll you know, if you've been waiting decades for this and you've got huge unrealized gains, what's the worst possible thing that could happen? If it goes into reverse and they slip through your fingers, you waited for decades for this and it slips through your fingers, you got to look in the mirror for what went wrong. So I'm not saying sell, I'm not calling a top. I'm just saying nobody goes broke taking some profits along the way.
Absolutely. Amen. I think the reason why I'm excited to be here is to find where is there still opportunities. And we've heard from Rick Rule. He says that he sold off 80% of his physical silver, but he's rolling it into the equities. So do you think there's some opportunity in the room with us here today?
Opportunity, yes. Certainty, no. I thought that was very interesting on Rick's part. If you think that what's happening now means we're going into that blow off top phase of the markets, you know, silver lags gold at first and then catches up at the end of a bull market, it sure looks that way right now. Yeah. And, you know, people say, oh, well, silver hasn't hit a real all-time high adjusted for inflation, so we're nowhere near that. Well, but comparing peak to peak is not how you look at gains. You look at the gains from the bottom to the top. And if the bottom was in late 2015, and if you look at it from that bottom, that cyclical low, silver has indeed way overpassed gold on a percentage gain basis. So if that's telling you, and it looks to me like this is what Rick is thinking, we're in the blow off top phase, where does the dumb money go? The Johnny come latelys, the generalist investor who suddenly sees silver and gold everywhere on the headlines, they pile into the majors. They pile into the blue chips, the go-to names in this space. So what I've been telling people is, you know, I don't know what's going to happen next. But if I thought that's where we're at, we're in that blow off top phase, then that's what I would buy. And Rick has also mentioned not just silver equities, but during his selling last October, November, he was saying he was buying the blue chips. You know who they are, right? The top royalty and gold producers in the space. And that makes perfect sense. If the next thing that happens is just to, you know, gold goes to 10,000 or what, you know, silver hits an actual real all-time high, then those stocks will go nuts. And as a speculator, you know, that's not necessarily a bad thing. Now, it's also possible, however, that we wake up, well, actually it's Sunday now. I don't know when this is live. So
we're live.
Yeah, so we go and we look at this trading start tonight and gold and silver tank. And they just go down all week because, I don't know, because Trump tacoed out on Greenland or whatever excuse they give for the moment, right? You know, if things go into reverse, that speculation could result in a lot of pain in the near term.
Yeah.
So again, I'm not saying don't do it. I'm saying it's not a buy low opportunity. And if you do it, you should have a hair trigger sense on taking profits if the market looks to turn.
Folks, I probably didn't do a good enough introduction either, Lobo. Just for those who don't know who you are and why you're brought to Vancouver every weekend or every year to speak, you've been in the space for decades. Can you just give us a little bit of your background here real quick before we proceed?
Sure. My joke on this is that I'm the cheap Mexican knockoff Doug Casey. The legendary speculator Doug Casey hired me 2004. So a little over 2 decades. And yes, my family is from Mexico. So I can say that with pride. And, Doug's like 6'2", or he was, whatever. He's a big guy, and he was tired of hitting his head on these rocks and these old colonial mine tunnels and stuff. So he hired me to be his due diligence guy and go check these things out. So I did that for a decade and a half, and now I do it on my own as the independent speculator. And by the way, Doug's newsletter was the International Speculator, RIP. So when I named it, I asked him if he was okay with that. He gave me his blessing. So there's still an IS out there.
Good.
Under my care.
Okay. And so you've been researching the space for decades here. Where are you invested right now? If you could speak to that.
Well, I am right now still massively long gold and silver, uranium, mainly those three, probably more gold than anything else. Then uranium, then silver. And I also have a bit of copper because I thought copper would do well in 25. It did okay, all-time high, nominally at least. Not so bad, but of course, silver and platinum put copper to shame on a percent gain basis. But and I have a smidgen of oil, just tiny smidgen. So that's where I'm at now. Where I'm looking to go, this is sort of stealing my thunder for my talk ahead. I started out by saying gold and silver are not a buy low opportunity. Not calling a market top. I'm just saying you can't argue that this is the stealth phase where nobody knows, right? The most hated thing in the world. Whereas oil does qualify. Nobody wants to hear about oil. OPEC is increasing production. If you listen to Doomberg, oil equivalents are going to flood the world. Like oil is like the new silver. Maybe coal is worse than oil, but oil is a more globally fungible market. It's easier to invest in oil because a barrel of oil is a barrel of oil, whereas coal in Newcastle is different from coal in BC or whatever. They're more regional fragmented markets. So I'm liking oil a lot. It's on my current shopping list right now. It's oil.
Are these ETFs for the commodities, or are you in the equities?
I'm definitely a stock picker.
Okay.
Maybe I'm just arrogant. I don't want some guy with a spreadsheet making my investment decisions, but I'd rather pick my own stocks.
As you go around the conference here and as you evaluate these companies, what are some of the main metrics that you're looking for? One thing that I am worried about is jurisdictional risk. As somebody who is first now stepping in, I have had silver and looking now at the equities. And yes, I'm probably a little bit late, definitely not a bottom, right? But selfishly, I'm trying to learn from legends like you that have been in the space for decades. What are the questions that you're asking these guys? What are the metrics that you're looking for? And how big of a jurisdictional risk are you considering?
So it depends on the type of company and metrics, jurisdiction, different things. So let's tick through some of these. I'm very risk averse on jurisdiction. And I know Rick Rule likes to say, it doesn't matter the color of the skin of the person who steals your money. It's just as stolen. That's very noble sentiment on his part. But, you really don't have to worry about Ebola in Ontario. And, Nevada is not AK-47 Central. And that does matter. I am willing to pay, not a premium. I always want a discount. No discount, no buy, no deal for me. I want a discount to NAV or NPV or something, even hypothetical value, right? But I'm willing to have a smaller discount in a safer jurisdiction. And of course, that includes not just like physical safety, but political rapaciousness on the part of the government. And, if gold's going to go from 2,000 to 3,000 to 4,000 to 5,000, you could say, oh, well, you're overpaying for a safer jurisdiction. But in an environment like that, I'm going to make money.
Yes.
And I'll sleep better at night. Right? Even if gold goes to 10,000 next month, if my project in Mali gets nationalized or in Burkina Faso gets overrun by communist insurgents or something, right? I'm toast anyway. It doesn't matter what the price of the commodity does. So I'm pretty politically risk averse, and I'm willing to pay a little bit more to be able to sleep well at night. In terms of metrics?
Well, while we're on jurisdictional risk, if I can, are you concerned with even countries like Canada and others that are needing to play catch up here, right? I'm from the States, by the way. So, we're
and
having,
they let you in?
Yeah, it's unbelievable. I can't believe it, right? Every time I sneak up here, I am amazed. They're starting to have conversations back home about strategic reserves, nationalizing mines, production, etc. So these jurisdictions, which historically have been safer, are you at all worried that might not be the case anymore for, jurisdictions like Canada or others
There's multiple levels of this. You know, you look at governments doing something which is really not free market capitalism.
Yep.
You know, it's fascism is such a heavy loaded word, but that was actually the hallmark of Mussolini's fascism, was this public-private partnerships like this, and the state was going to direct. Yeah, you could own the businesses, but we'd tell you what to do. Right? And this does not sit well with me. But obviously, if you have a gotta have it customer like the military that's price insensitive, for the people that actually got it, that makes some sense. But of course, those ever so fearsome words, "I'm from the government, I'm here to help," should never be underestimated. And what the government giveth now, it can taketh away after the next election. And so this whole thing does make me nervous. But the other thing is, especially if you have criticisms for your government, whether it's me in the US or a Canadian up here or wherever you are, it seems like our government is always the worst, right? And we're the ones who are most quick to criticize our own government. And therefore those other guys over there don't seem so bad. But that's not true. I think we look at crazy things the NDP is doing, right? But you know what? People have still been able to mine in Canada. It hasn't gotten that crazy. So maybe the takeaway here is don't listen to what they say, look at what they do. When they start actually doing things that are hostile for shareholders, right? That's really, for us as speculators in the market, that's the key thing. Like if the United States government or other ones intervene to secure critical minerals, well, great, that might help the mineral on the open market globally. But if the company producing it gets taken over, is that going to be great for shareholders? Or let's say it's not taken over, but if the United States government is a major stakeholder in this company and is kind of calling the cards, it has a seat on the boards, is their priority going to be returning for shareholders, or is it going to be securing the metal for the military or the data center or whatever the need is?
Right.
So, this does make me nervous, but at the end of the day, it's not like, a West African country that has a history of coup d'etats every other year.
Right. Okay. So, and I appreciate your point about maybe paying a slight premium for jurisdictional security, and that makes sense. So now, metrics, the questions that you're asking these guys as you conduct your research and due diligence on new opportunities.
Therein I could write a whole book. A couple quick things would be, for producers, it's pretty simple. I'm not saying it's just one variable, but the one starting place is very easy. Are you making money or not? If you're not profitable, and let's say if you're in gold or silver and you can't make money at $100 silver or $5,000 gold, there is something really wrong with your company. I'm sorry. There's just no way that you can have a good mine and not be making money right now. That's maybe not too likely, but I would look at maybe the history of profitability. If you had a great quarter in Q4 25, great. But how did you do the rest of the time? And you know what? If you're in production now, your mine was probably built assuming $1,700 gold, maybe an aggressive assumption of $2,000 gold. If you're already in production, that mine was built under a much lower price scenario. So, okay, 5,000, everybody's making money. Were you making money at 4,000? If not, you should have been. Were you making money at 3,000? You should have been if your mine was designed at 2,000. And you could say costs go up. That's my refrain, but the number one cost is energy, and oil's been going down over the same time.
Right.
So copper also, uranium also, higher prices. If you're a going concern now, you should have a track record of profitability. And if you don't, I'm done. I don't even need to ask any other questions. So very simple litmus test now for producers. For developers, I want to look at the NPV. Do I still get a discount to the supposed value of this? And here, there's a temptation, and I've heard some pundits saying, gold's $4,500. It's ridiculous to have a price assumption of only $2,000. Well, no, it's not. Because if your mine has a 20-year mine life, okay, let's say gold stays at $5,000. Your costs are gonna catch up. So you can't look at the difference of 5,000 versus your cost. So there's a good reason why the industry uses a 3-year trailing average of prices to see whether or not your project is feasible. And really, if it's a long life project, you should be looking like a decade average. You know, some of these big copper mines, they take a decade to pay back.
Right.
So you can't say, oh, $6 copper, well, this mine is super profitable. Well, you know, by the time 10 years from now you pay back, what's going to be your cost of energy, steel, tires, everything else. So for developers, I still want a big discount to the supposed, you know, net present value of the project. For explorers, there really is no value. There's no metric as such. I look for a couple of things. One is what I call the pre-production sweet spot. Not my term, the industry standard, but there's a difference between literally pouring money into the ground, drilling holes to see if you have something, and getting money out of the ground when you have a mine, you're mining, and the market does a re-rate there. This is highly reliable. And the gain, to my knowledge, I'm the only one that, or the first one perhaps, to measure this, and it's quite extraordinary. The gain is something on the order of a double. Not a 10 bagger, not a 100 bagger. But here's the thing, the gain is on the order of a double, and 95% of the companies that set out to build their first mine do it. You know, the trouble happens after you build the mine, but the re-rate happens when you build the mine. This is the thing of beauty for a speculator. So there's an extraordinarily high probability, not certainty, of at least a double, which is, you know, the other thing I like in exploration stage is, so pre-production sweet spot, that's developers, sorry, exploration. I have something I call success in progress. And the idea there is that nobody knows who's going to make a discovery. Not Doug Casey, not Rick Rule, certainly not me, you know. And if you have a lot of money, you can throw a very broad net and you can capture all these people who make fantastic discoveries. Most of us can't do that. I'm not a billionaire, so I can't buy them all like Eric Sprott. You know? So what I do is I give up that first discovery hole gain, which can be spectacular, an overnight double, right, on a smoking hot drill hole. But even a smoking hot drill hole can turn out to be nothing. It might just be by bad luck they drilled down the long dimension of a very small, insignificant thing in the ground. But after you start hitting this thing, like first result, second result, third batch of drill results, and it's still getting bigger, that's what I call success in progress. And there's huge value to be made between that discovery hole and when you've drilled off a deposit, you're starting your feasibility work. It's the first part of the Lassonde curve. That's not one day. It's not one drill hole. It's usually a couple of years of drilling off something that's actually there. And that's putting the odds in my favor. Not a metric, but it's something that I'm looking for. I'm looking for success in progress and a gleam in a geologist's eye. It's got to be this big. You know, that doesn't count.
And so how much, where's your allocation as far as producers, exploration, etc.? How are you divvying that up?
I see that as kind of my own barbell strategy.
Okay.
Nassim Taleb, I have an anchor in some producers, some of the big producers, because those are the least volatile and they give me some leverage to the underlying commodity. And then I'm skewing towards the other end of the spectrum. I don't own a lot. I don't think I own any mid tiers. And it's not that they can't do well, especially if they're single asset types that get taken over, another Rick Rule favorite. But I'd rather just have, you know, this relative safety of a couple of the blue chips, and then skew towards earlier on the spectrum, the success in progress plays that I was talking about, and the pre-production sweet spot plays a little bit farther along the Lassonde curve.
I see. Okay. And when you're looking right now, central banks and this whole rally just seems to be, you know, the fundamentals are there, but one of the big outliers and themes that we're witnessing right now is just the lack of trust in every institution, whether it be political, central banks. And so how much are you paying attention to what the Fed's going to be doing here, quantitative easing, interest rates? How much does that play into your thesis?
Marginal. Like, as you mentioned with the central banks, and it is kind of funny if you think about it, Goldbugs has spent decades hating central banks. And now central banks are our best friends. They're buying gold. There's, you know, I don't actually think the central banks have sent gold higher. I think they've prevented it from ratcheting down. And that has been a game changer. Absolutely no question in my mind. That is a game changer.
That's exactly what Andy Checkman said about margin requirements going up. These guys aren't using margin. Yes. And so they're just soaking it all up and they're keeping it from coming back down. Right. It's funny that you mentioned that as well.
Oh, not so funny. It's true. Yeah. Hopefully. But yes, no, that's, but the important thing about this is, like, we will, if that ever changes, I mean, if or when it changes, we'll see it. So you won't have to flounder around and guess or whatever. And until that changes, let's put it this way. 2 years ago at this conference, when uranium had gone triple digits, a hockey stick chart, I was the one everybody hated on the uranium panel saying, nothing goes up forever, straight up. Taking some profits isn't a bad thing. Some correction would be to be expected here. And everybody moved away from me on the Group W bench.
I remember that panel.
Oh, do you?
I remember watching it.
Right. I would normally be saying that about gold and silver now. I mean, it's absolute hockey stick. But the central bank thing is really that big a game changer. And you've also got just sort of not just retail, but really deep-pocketed investors around the world. Really, the scales have fallen from their eyes. And gold still is a four-letter word, but it's that change of perception. The world is not the happy, safe place where globalization makes everybody richer anymore. We have globalization going into reverse. We have geopolitical risk like nobody would believe. Even if Trump goes away in 3 years, that's 3 more years of Trump. And whether you love Trump or hate Trump, he's certainly an agent of change, if not chaos. So, in a world like that, how many people with, big money, deep pockets, how many people are going to look at that world and say, yeah, I don't need no safe haven assets. Everything's fine. Like that SpongeBob meme with the fire, everything's fine, right? Who in their right mind would do that? So having been burned by people who were sure that gold was going to keep going screaming up in 2011, I'm very cautious about saying, it has to keep going up. But what I'm saying is I'm looking at the world we're in. They're not my model. I'm looking at the reality of what's going on in the world. And I see a lot of downside protection. Like in that world, who's going to just wake up tomorrow and sell all their gold? I just don't see it.
And so what would you say to folks that are sitting in a traditional 60-40 portfolio? They have no exposure to any of this, not physical, no equities. What would you say to that person?
For that person, I would say buy some today.
Yeah.
No question. Even if it's gone like this, it's kind of interesting. You've got Morgan Stanley saying, forget 60-40, it should be 60-20-20, yes, and other things. Like, what a world. You talk about game changers. This is mainstream, not tinfoil hat, guys in their bunker in Idaho, gold bugs. This is the mainstream of the mainstream saying you should have some gold in your allocation. And big numbers. Jeff Gundlach scaled his 25% is not excessive down to 10%. But if big money went 10% to gold, it will blow the market out of the water. Right. And other things like that. So, but at the end of the day, I don't own gold bullion. We're talking gold and silver themselves now, not the stocks. I speculate on the stocks. But to me, the bullion is not a speculation. It's not even an investment. I don't buy it because I think it will go up. As Rick Rule says, I buy it because I'm afraid it will go up. Right. And it's insurance in case of a rainy day. And so what is if you're looking around the world and there's no fires anywhere, maybe you don't worry about fire insurance. But like we were just saying, deep pockets are looking all around the world now, and they're seeing fires everywhere. So at that point, is your first question really how much is the fire insurance? Or is it really, I got to get some fire insurance before the fire hits?
Yes.
Because after it hits, you don't care what the insurance would have cost. You wish you had it. Mm-hmm. The time to buy insurance is before the house catches on fire. And there's fires all around the world. So hear me clearly here. I am not saying if you buy today in Australia or somewhere that's the market's already open, that you will make money or that it can't go down tomorrow. That's not what I'm saying. I'm saying in our world, if you don't have any fire insurance with fires breaking out all over the place, gold and silver are history's most tried and tested fire insurance. And I'm not even anti-Bitcoin. I don't know if I'll get hate for even mentioning Bitcoin. I'm not anti-Bitcoin, but Bitcoin didn't even exist in the GFC in 2008, let alone 1987 or 1929. So you don't have to hate Bitcoin to just point out, look, it's untested.
Yeah.
Whereas gold and silver are tested over millennia.
Yeah.
Right. So that's my answer. So I feel absolutely no hesitation at all to tell somebody who's completely out of this market, you want at least a finger in this pie.
Yeah. Yeah. Well, it's interesting you mentioned that because just outside our event here right now, I'm being told that there's tens of thousands of people protesting right now. We're seeing back home in the States, political strife, internal chaos. And in this changing world order and all of this chaos that we are having, one thing that makes sense is gold and silver being at all-time highs and not seeing any significant pullback from here. I mean, even a short-term correction or taking a break would be normal, right?
Yes.
But any big drawdown, I just don't see it. Central banks aren't sellers at these levels. These big hedge funds, sovereign wealth funds are not sellers at these levels. We only need more and more silver, copper, and some of these other industrial metals too. And so, final thoughts as we close off here, it just as far as with all of this chaos and the changing world order, are you finding safety specifically just in gold and silver, or are you looking at anything else, real estate, any other asset classes that you're hedging with?
Let me answer it this way. People have said, well, why would I take any profits? Why would I sell anything? I think it's going higher. Even if it corrects for a while, it'll go higher. So why would I sell anything? Well, one, what if we're wrong? The smartest people I knew in 2011 were sure that gold was going straight to $5,000 because the GFC was, now that looks like a foothill to the higher peaks we're seeing today. But at the time, it was off the charts, unprecedented. Everybody was sure. The dollar was going to zero, gold was going to the moon, and yet a 5-year bear market ensued. So, no profit is an actual profit until you realize some gains. And so in terms of what you're saying in finding safety, so people are saying, well, if you're going to sell your gold and silver stocks, what would be better than that? What would you do with that? Well, I'll tell you what I did with that. I paid off my mortgage. And in terms of feeling, let's say the whole world goes crazy, AI takes over my job or something like that. I have no mortgage. All I need to do is make enough money to pay for some food and gas, and I'm okay, right? So, and it's a real asset. Government can't print another house for me or something, right? It's a real asset. So the short version is just, I'm enthusiastic. We've just talked about many reasons to be very bullish, but pigs get slaughtered. Nobody goes broke taking some profits. That doesn't mean you're a traitor, you lack conviction or something. It's just that if you don't realize any gains and they evaporate from your hands, then it's the mirror where you need to look for fault. And, I'd rather sleep well at night in a house that's paid for.
Yeah. I can appreciate that too. And Lobo, thank you again for joining us here. I look forward to, pleasure to meet you. I look forward to getting you back on my show at some point in the future.
Even though I had the disgrace to be a voice of reason.
Well, we need a voice of reason in the party. We do. We like to have a good time, but somebody needs to make sure we get home safely.
Yes.
Right?
I'm the designated driver. There you go.
There you go.
That's my new handle.
Lobo, we appreciate your insights. For anybody who's looking to find you, where can we find your content?
independentspeculator.com. Real quick, there's a free weekly newsletter. The one thing I can promise, whether you like it or not, I promise that we will not spam you with a flood of daily advertisements. I hate that. You get one email per week notifying you that we published the digest, and then you can decide what else you're interested in.
Okay. Well, there you have it, folks. Lobo, we appreciate you for coming on, and we'll get you back soon.
Thank you, Zach.
All right.
I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.